Brief History of Banking in India Phase 2, 1969-1991, Nationalization, Regularization and Growth. The second phase of nationalization of banks took place in 1969. 14 banks were nationalized in this year by the Prime Minister of India Mrs. Indira Gandhi. In the year 1986 more banks were nationalized with deposits over 200 crore. The major objective behind nationalization was to spread banking network in the rural areas and make available cheap finance to Indian farmers. Until the 1990s, the nationalized banks grew at a pace of around 4%, closer to the average growth rate of the Indian economy. Phase 3, 1991 onwards, liberalization and its aftermath. Today Indian banking sector is mature with banks having strong and transparent balance sheets. The major growth drivers are increase in retail credit demand, proliferation of ATMs and debit cards, decreasing NPAs due to securitization, improved macroeconomic conditions, diversification, interest rates, regulatory and policy changes, e.g. amendments to the Banking Regulation Act. Certain trends like growing competition, product innovation and branding focus on strengthening risk management system emphasis on technology have emerged in the past. Amalgamation of banks. Larger banks would have a relatively advantages. Hence recently the Union Cabinet on the 15th of February 2017 approved the mergers of State Bank of India with 5 of its associated banks including State Bank of Bikaner and Jaipur, State Bank of Hyderabad, State Bank of Mysore, State Bank of Patiala and State Bank of Travancore. Hopefully you find this video helpful.